What's going on, kids? It's your favorite uncles, and we are here to talk about your financial success and how to build your financial success. Ryan, my first question is always, brother, how's your mental health?
I am doing pretty good. Transitioning partially from lifting to cardio, and we'll bring it back later, but losing some weight, feeling good, breathing heavy, breathing easy, and feeling great. Like it's been a fun transition. And fitness, the better fitter you are, I think often the better you feel regardless. So, anyone who's listening, get in the gym, get your finances right, but get your fitness right too. It's you get both those. How could you be doing poor?
Good question. My first question is because we really never really discuss your financial background. We always discuss your fitness background and your life being building up to being the successful person you are. So let's get into a little bit of where did you get your your financial success from, and how did you build it up to this point?
No problem. Like, yeah, we do. My powerlifting life, my lifting life, and all that sort of stuff's one thing. But my day job the whole time through my lifting journey has been in finance. So way back in the day, I got a business degree from the late '90s, sort of early 2000s, and I started working in the corporate world at a big Fortune 500 kind of company in Canada as a sales guy, and then worked my way up to where I was a regional in a big company, and then I burned out from climbing the corporate ladder and quit that job and started working in banking and got my financial tickets. And that's been, I think, 9 or 10 years now. I've been working in various roles during my day job in the banks as an investment advisor, a bank manager, a mortgage specialist, a credit specialist. And I'm currently working on my CSC and my PFP, which are sort of Canadian designations. I'm sure they have something like that in the States. So I can officially trade stocks and bonds and investments and all that sort of stuff up here in Canada. So for 9 years, I've been working in the banks and in finance, all to finance my lifting. Yeah,
Now, why did you burn out of the corporate world? What happened?
I was, and this we brought the very first time I was ever on your show, when we spoke of I was fat, sick, and nearly dead. Couldn't tie my own shoes. I was almost 300 pounds, and I went to that one business meeting that I had to go to, and I couldn't tie my shoes, and I had to go to a business meeting with my shoes untied because I was just fat and smoking cigars and that business corporate lifestyle. And that's when I was burning out from it. It was like, man, I'm just going to be fat and have a heart attack and all of that. So I stepped back from grinding 68 hours a week to getting a 40-hour a week bank job and grinding 20 hours a week in the gym. But that was the precipitating. It was just I was fat and unhealthy and wasn't sleeping, and it was like it wasn't the right lifestyle for me to be grinding away at the corporate sort of 60-hour a week lifestyle. And I'm much happier and healthier now, working in a bank 9 to 5 Monday to Friday, and then lifting in all my spare time.
So pretty much, it was better to save your life than to slow down the money. And matter of fact, the director of that movie you mentioned, his life was heading that same direction. He was making big boy money, traveling the world, smoking cigars, eating what he wanted to eat. But he realized it was causing him health benefits. Well, health costs in the long run was going down, and he had to fix it.
Yeah.
So I'm glad you were smart enough to take heed, because most people would have kept on smoking those cigars and been a fat boy for life, and been everybody been at their funeral talking about he was such a good guy.
Yep. And it's like it's good to chase that bag, and you got to chase that bag, but you can't chase it at all costs. That's the lesson there. You chase half the bag, but a healthy lifestyle, you're going to live till you're 80, and you're going to enjoy your life a lot more than being fat, sick, and nearly dead, right?
Good point. My next question is, I know people are scared of the dangerous stuff. So before we get into the dangerous investments like crypto and some of the other investments out there, why do you believe as a banker and professional, people always want to take the safe route like Bank of America, Truist, and the trusty banks of the world, but you're not really gaining any much interest, but they've been around for thousands of years. So why do you believe people trust their money to these guys when they're not really getting much money from them?
They shouldn't, but that's a longer answer.
Take as long as you need, my
You
guy.
should
We are
only
here.
trust yourself with your money, and you use the banks as a tool to reach those investment markets. And you should ask questions. If you just let the bank do it, you're at the mercy of some guy sitting behind a desk whose wife might be mad at him. He's got to grab a coffee. He's got a life. He's got a mortgage to pay. You're not necessarily, you got to ask the right questions. Those big companies and the big 5 banks in Canada and the ones in the States are safe. There's some deposit guarantees. Like if you hide your money in the mattress, no banks, your money shrinks because inflation is going to take that away. So you can't hide your money under the mattress. You put your money in a savings account in the bank, it's safe. If the bank goes bust or the world goes to heck, you even get a check, you get your money back, it's guaranteed. But it's actually still shrinking, just slower than letting it shrink under the mattress because they're giving you a couple percent interest. But if inflation is higher than the interest you're earning, your money's shrinking just the same. Then the next step is you go, hey, I'd like to make a little more money. And the banker will go, okay, no problem. What do you want to do? Here's 10 options. Right? Now, if that banker doesn't take the time to coach you up, interview you, talk about your needs, your goals, your finances, you're just going to pick something. We call those order takers. You're going to pick something off the shelf, and it might not be the right product, might not meet your goals, or might not make you the money you want to make within your risk tolerance. Most banks, Bank of America, small banks, savings and loans, boutique investment, all sell every kind of product. So you could go into your bank and buy whatever you want. But the real issue is you got to get into the coaching conversation with the person you're facing and or ask those right questions. Do you have this kind of investment? Do you have a self-directed trading platform where I could buy a share of Nike right now? Do you have, these sorts of things? Because they're all there. So it's a education piece from the customer. Like Norris, you got to walk into your bank. You got to know what's up a little bit to start that conversation and get those right questions going, because you can't depend on the guy at the bank going, hey, Norris, here's exactly what's right for you, unless we get into an hour-long conversation. If you came into my office asking me about how to invest my money, your money, I would ask 100 questions. We'd chat for an hour before we even got to, okay, here's 5 options I think are good. Now go home, you research them, you come back and tell me which one you want, right? And that's how it should go, but it doesn't always, right? Because that guy's got a rent to pay. He's having a shitty day. You go, hey, here's my 10 grand. What you do? You should do this because it's easy. You'll make this. Okay, everyone, that's kind of where it's at. But why people trust the big banks, hundreds of years in the game, and there's deposit guarantees. Now, nothing's guaranteed in the market, but I mean savings accounts, and it's easy. It's where your money is anywhere. It's where your paycheck's going. It's where you're, right? Like it's easy, and it's simple, and it's safer.
Now, do you believe, I know here, like at least, I'll be honest, some people, at least 85% are probably Black community, like to bank with safe banks because maybe they're uneducated about how to take these type of investments. Do you believe that we should start at least educating our children on how to make the proper investments for their future?
1,000,000%. Like, I don't want to open up a big political can of worms, but there's a lot of classes in high school kids are taking right now that you don't need to give a shit about. And they should be teaching, here's basic investments here in Canada, TFSA, RSPs, in the States, 401ks. Here's this, here's how you balance a checkbook. Here's what interest is. Here's what compound interest is. Why this isn't taught in school at this point almost makes me want to think it's a giant conspiracy to keep people poor. To go back to my original story, I come from very humble beginnings and I didn't know any of this stuff. And I went to university for 1 year in sociology, your usual arts degree bullshit. I was getting in debt on a student loan. And then I was like, this is bullshit. I'm going to end up a bartender with 50 grand in student loans here taking this. So the reason I dropped out of my first year university and went to business school was like, you know what, screw this. I need to learn how to make money. I need to know money. I need to know what the economy is. I need to look at the business news on TV and go, okay, I understand that. And it was even if I became a contractor tomorrow and was finishing cement, my business education has paid dividends beyond everything because I can read a business news. I can have a chat with you. I could, even if I started just being a lifting coach tomorrow, it was the best thing ever to get basic education and financial literacy. And then I agree with you 100% in the States. I guarantee you it's the Black community that's undereducated. Up here in Canada, it's the Indigenous community that's extra undereducated on things like that. Because maybe they don't have the parents to model for them that are in the market or doing this investment or different things like that. At a certain point, if you're a grown man, it's your fault. But in the children age coming up, it's society's fault or our fault as parents or leaders or coaches, you know?
Another good point. Like I remember when I was maybe 13, 14 years old, my mother got my first savings account, and I've been a member of Bank of America, one of the safe branches in the state since 1991. So at least she did do her due diligence by at least saying, "Hey, here's something for savings." But I don't believe here in the states. I don't know about in Canada, but no one really has the time or maybe even the resources to be like, hey, here's where you put your money for the future. Here's how you invest in this 401k. Here's how you move your money around. Like I remember when I had my first 401k from my federal job, I started investing in the euro and it was paying great money, but I was willing to take risks with my money. And I was telling my coworkers, hey, I have my money in this thing called a euro, is doing wonderful. You should take that risk. And everyone was afraid to take that risk. Why do you believe that is true?
A bird in the hand, a bird in the bush, and lack of education. Like, you know, you think, hey, here's $1,000. I'll guarantee you 1,010. Hey, you're up $10. Here's $1,000. Hey, you might come out with 1,100 and you might come out with 900. That's how investments work. Maybe you win, maybe you lose, maybe, you know, right? So there's a fear factor. And I think that's fair and that's okay. And it really should be the percentage of your stack. Like if you came to me, Norris, and you said, this is my only $1,000, right? I'm not going to put that in the market for you, buddy, because it's a, you know, that's all your world. So, you know, seeing that $1,000 go to 100, then 500, then 1,100, then 600, you know, woo, right? You're going to have a heart attack, buddy. All right. You come to me with 10 grand. I go, okay, we're going to put some of it in this, some of it in this, some of it in this. This is safe. This is risky. This is this. And you're going to see your money move around, but you're not going to see it go to, you know, half and then double and then down. And then, you know, right. Like I think there's fear, and that fear is from just lack of education. And then starting out, everyone's more scared. I was shit scared when I started investing. Now I got a bigger stack. I watched my stack go up, my stack go down, but it's in different industries, different things like that. And I'm like, okay, this industry's up, this one's shit in the bed. 2 months later, it'll be the opposite. And I've watched my stack slightly grow over the years, but that takes education and just being aware and willing to take those risks, right?
Good point. Now let's throw it out to my favorite thing that's been going crazy right now since 47 got elected here in the States. Since 47 got elected here in the States, we won't say any names because we don't want to trigger anybody's political views. But since 47 got elected, the one thing that's been going absolutely crazy right now is crypto. I know a lot of people are afraid of crypto, but why do you think, I have a two-part question. Why do you think people are afraid of crypto, and why do you think it's shooting so crazy right now? Where last month I had maybe $150 in my account. I woke up in the last previous 3 weeks. Now I have damn near $700 in my account, and I haven't even invested any more money into it. I just put what I put into it, and I walked away.
All right. So crypto, why are people scared of it? It's new and it's not based in reality. Right? There's two very good reasons. Now, people are going to say, Ryan, well, stock market's not based in reality. Partially, they're correct. The stock market is a beauty pageant as well as math. A company could be cool, so its stock could be inflated because it's cool, right? But a company's stock could be in the tank because their books are cooked, or they're not making money, or their stock could go up because they're making money. And any kind of stock in the stock market's been around for hundreds of years, so it's not scary, it's not new to some people, like when you get into it, but for society, it's not new, right? So there's that Bitcoin is new and crypto is new and all of that. So people ought to be scared at a certain point. I don't think I think it's personally past its new phase, and we can get into that later. But it's also not based in reality. It's only based on itself. Now, when you buy stock in a company, you buy a share of Nike or Under Armour, you own 1/1,000,000th of that company. It's a real thing. They have stores, they have factories, they have income, they got tax returns, they got books. So that's why the stock market goes up and down and crashes here and there. But because it has some basis in reality, it doesn't wildly fluctuate like crypto does. Some guy invented crypto essentially as a way to trade money on the internet without governments or taxes involved. That's going to be a problem now because government and taxes are involved now. And it's just traded on what I think you want to pay me for my little slice of crypto. There's no business under it. There's no real estate. There's no books. There's no income. There's no, right? So it can wildly fluctuate or be made illegal tomorrow.
Mm.
Now, is it going to be? No, I don't think so. I think we're past that. But I'm saying, right, it could be your 100,000, your $700. You could wake up tomorrow and it could be 70 cents.
Good point.
If you bought $700 in Under Armour shares, it might be $650 tomorrow. It might be $710 tomorrow. The stock market could crash and it could be down to $100. But guess what? Under Armour's still selling shoes, and that stock will go back up because that company's still making money, still selling your hoodie you're wearing. Right? You see the difference there when something has some touch of reality or no touch of reality. So crypto's kind of new to the average person. It's what, 10 or 15 years old now or something like that. That's still really new. But to the average person who's learning about investments or, what's this crypto? They read something in the news. It's brand new. So that makes it scary, any kind of thing, right? And then I think not based in reality is another scare. Now, I think that's okay. Lots of things aren't necessarily based in money's not based in reality. We can get into long philosophical discussions about a dollar not being real either, But those are why I think it's really scary. It's wildly volatile, it's new, and it's only based on itself, not an underlying asset or principle or real estate or something.
Good point, because I remember a long time ago, crypto was pretty much used for illegal gambling and pirates holding you hostage.
Yep, that's
So we came a long way from pirates like, hey, the only way I want you to pay me is in this crypto because it's untraceable, and gambling sites saying, hey, you can have this crypto because it's untraceable. But I remember a long time ago they had this movie about the future and it was called APD or something like that. And they did mention Bitcoin in that movie. And this was maybe 15, 12 years ago. So that's when I kind of got a glimpse of maybe it's real. It's so real now. I have a United States version of crypto. They're even getting into the crypto game.
Mhm.
So I'm assured that now even the United States government believes, hey, this may be a possibility. Why do you think that is?
Because they now have accepted it as something that's not necessarily going to go away, or they can't necessarily make it illegal, right? Now, if a country, a big time country, Canada, India, or America, maybe not even Canada, we're too small, but the States, China, Eurozone, something like that makes Bitcoin illegal or even crypto, you're all are effed because it'll be harder to trade, but it can't be made illegal worldwide because of internet connections, IP addresses. You could trade in China right now from my laptop here. So I think the government's saying, okay, it's not going away. We got to figure out how to regulate it and tax it. And right, so that's why the government's getting into it. They're digging deeper. They're okay. So if people want this or people are going to trade it, we got to make our slice of the pie. So that's why I think the government is now coming along with either U.S. Bitcoins or different kinds of things. And what's interesting, and this will just be funny, I know it's going to be called crypto forever, but it's not crypto anymore because crypto is what sort of that meant illegal or underground or like what. And it's just like, if you can go to your local freaking bank machine and there's a crypto bank machine, that ain't crypto no more.
Hey, just like right now, woke doesn't mean woke. So, so
Yeah, woke doesn't mean that I woke up this morning anymore. That's right. Crypto does not mean illegal, scary, and underground anymore, right? It just means it is what it is. It's what these electronic money's called. It's just crypto. But it's funny.
I can go right down the street to a machine and I can buy or sell or trade crypto right now if I wanted to. Now, Kevin O'Leary, I don't know if you know who
Yeah. Oh yeah,
Kevin
big time.
O'Leary is.
Mhm.
He recommended that people should keep 20% of all their earnings or all their savings leased in crypto. What would you recommend as if I came to you like, hey, I got this money over here, this money over here. How much would you recommend that someone put in crypto considering it's so new?
There's no line. It's based on your risk tolerance as an investor. Now, that's what I do as part of my job, right? So if you came to me with, your stack, I would get your stack in different things. So that's not bad advice, but attaching a 20% to it That's where he kind of loses me on that, because if you're willing to gamble, maybe it's 30%. Right?
Mm.
If you're a conservative guy and you're like, man, I got to save up this stack, I got to buy a diamond for the wife, and I got to put the kids through college, then it should be 5%. You see, right? So I don't want to put a number on it, but he's correct in saying you should have a percentage of your stack in any kind of investment. It doesn't have to be crypto. Like, it should be in the stock market. It could be guaranteed income certificates. It could be crypto, you know what I mean? Whatever. And even in the stock market, you could have it in food, in retail, in finance, in factories, in, you know what I mean, different stock markets, China, US, all, right? So all of your eggs in one basket, never. So yes, he's totally right, but I wouldn't put any kind of percent on it. It depends on how wheeling and dealing the individual person is, because crypto is wildly risky right now, wildly risky. So, it could be 100 grand tomorrow, it could be 10 grand the next day, back to this. Yes, it's going up, of course, but I mean, in between, there's lots of people that have lost their shirts already, and more people have lost their shirts than have made $1 million, because that's how investments work. If everyone made $1 million, we'd all be rich and there wouldn't be investment. Like, it doesn't work that way. The house always wins, right? So you got to try and make your stack. But yes, it could be a decent thing to put your money into if you're risky. But I have a slightly different philosophy on crypto at this point, but we can save that, or you can keep going with your question. So Kevin O'Leary, he's right. A percentage of your stack in crypto is a good idea. Don't put a number on it, because that would be based on the individual person's risk tolerance.
Well, while it's top of mind, what is your feelings on crypto while it's top of your mind?
Okay, I'm not into it. And it's not because I think it's going away, or because it's bad, or it's illegal, or it's not real, or anything like that. These kinds of things have happened many, many times. It's new, it's hot, it's blowing up, it's great, right? So when was the last time other things like this had happened? Remember weed stocks? Mm-hmm. They were new, they blew up, they went up, they went down, they blew up again, they went down, then everyone caught knives, and now they're all worthless. Now, that might not happen to crypto, right? But there's that wildly, whenever anything's new. The dot-com bubble in the 90s, when all the websites blew up and all the internet stuff blew up and the stocks went up crazy. It went this, it went up, down. Everyone lost their shirts. Some people made a mint, all that. The gold rush. This goes back. This is not new when a new industry or new investment idea comes along. In the gold rush, same thing happened. How many gold miners do you think got rich?
Probably very low percent.
That's it, exactly right. Now, here's the thing I think with Bitcoin, and it's going this way now, is, do I think the average person can make a little money here and there in crypto? Absolutely. Maybe you can hit a mint, but more people are going to lose than win. That's how investment works. That's how the casino works. The casino wouldn't be in business if everyone won. The stock market wouldn't be in business if everybody won, right? So people are going to lose. Now, here's the thing. Who got the richest in the gold rush, do you think?
Probably the person said there's gold in those hills and flipped you and sold you into a dream.
See, you're close. You're close. It wasn't the gold rush miners. It was the guy selling them land and shovels.
Yes.
So back to Bitcoin, right? What's the shovel? Now, you could be investing in blockchain mining, server companies, electricity. Think of the industries around crypto. Right? Sell the shovel at this point. Now, the gold rush already happened. A lot of people put in $1, took out 100 grand. That's over. Bitcoin and all the coins now are at historic highs. Yes. What's one of your first lessons you learned in business? Buy low, sell high.
I'm glad I bought when I bought it, because unfortunately I was telling someone, being honest, I'm hoping a sucker comes along the way and buys the same crypto I bought for 25 cents. Now is worth $160. I'm hoping there's a sucker out there that's going to buy at 163, because that's the only way I'm going to make money.
Is if you actually realize your investment, right? That's the thing. Yes. You could have $1,000 in crypto and you could hit sell, and if nobody buys it, guess what? It's worthless, right? It's worthless. Just like any investment, that's just not crypto. But now that crypto, I think, is here to stay as an industry in itself, the industry is going to mature. So now there's stocks. You can buy crypto stocks. That might be a better thing now. And who else makes the money in crypto? I might say, Norris, would make you better money? Go buy one of those crypto bank machines and stick it in your local bodega and make a tiny little percentage to every sucker that walks through. Sell them a shovel. Sell them, each guy walks by. Norris gets a 0.25% every time they put money in that Bitcoin machine. That's, in my opinion, there's more areas for growth. Now, I'm going to be shot to shit by all the Bitcoin guys, this and that, whatever. But I think, because there's still money to be made in the actual crypto investment, not saying there's not. But the smarter play now, just like every other industry, gold rush, weed, .com, anything at a certain point, you make more money selling shovels to suckers than you do digging for gold yourself, right? And I have invested in crypto over the years. I've never bought a single coin, but I invested in some companies that made the servers to do mining. And I don't even know half of this shit, but that was the stuff I was looking for, right? Which, okay, shovels. Now there's ETFs, which are exchange traded funds with crypto. Now that's a smarter bet because you're pulling your money, you're pooling it with a million other people in a big stack. Big stacks fluctuate less. And then you can be in 100 different coins at the same time. And you can be in server companies, and you can be in data mining companies, and you can be in blockchain companies. That might be the way to go for your average person who doesn't have, if you came to me with $1,000, I said, unless you're willing to set it on fire, bet it on red in the casino, there might be better ideas. And I want people to think too that crypto is not the first new thing that's come along. There was weed, there was the gold rush, there was .com, and it's the same pattern every time. There's lots of research on this stuff, right? So, and then right now with Bitcoin, say getting close to 100 grand. So do you think it's going to double again?
Maybe, but right now,
or going to double again in a week or double again in 10 years. Yeah, it'll probably double again, but maybe. It might take 20 years at this point, because as an industry matures, growth slows down, and this isn't any industry. These lessons have been learned, and people forget that these lessons have been learned in every other industry, right? So if you came to me now and said, hey, I want to put this 10 grand in crypto, I might go, hey, why don't you put 2 grand in crypto and take the other 8 grand and find yourself a blockchain company and a server company, right? And you can be in that space selling shovels.
Good point. Now, personally, I've reached out to you at least 2 times that I know of to get me out of trouble or to ask you a very important question. So we're going to put my own personal finances out there. Approximately, maybe 2 years ago, I was in some seriously life-threatening debt. The debt man was on my buttocks, and I couldn't get him off me. I reached out to you, and I was like, hey, I got this money in my 401k. I need this money for when I retire, but I have this amount of debt. What should I do? Why did you recommend I cash out my 401k, which is very important for the future, to pay off that debt?
Because on a base level, it would have been better to not cash it in, but credit card interest is 20%. If your 401k is only making 5%, the 20% on the credit card debt is making you circle the drain more than 5% per year when you're 60 is helping. That's pretty much whenever you want to attack a debt, you start at the highest interest first and work your way down. Your mortgage, hey, you can pay extra on it, but why bother if it's at a reasonable rate? If your investments, now if you had a different kind of debt that was paying, like a car loan or something at a certain percent and your 401k was making the same, then it would have been a bad move to pull it out. Just suck it up, buttercup, and pay it down. Live broke. Remember those college days? That's how you live now, right? But that's why, always go whenever you're having debt problems or finance problems, make a list and go, okay, which ones are due first? Which rate am I paying? And if I have an investment stack, how much am I making on this stack? Right. And then that's why, because credit card interest is 20%. Your 401k wasn't making 20%. Get rid of the debt. Now, in the perfect world, hopefully you didn't rack back up your credit cards and you start filling back up the investments after, right? Because if, say, you had, we'll make up a number, you had 20 grand in credit card debt at 20% interest, that's costing you $200 a month before $1 goes to the principal. You're never going to get out of that debt. You pay off the 20 grand in credit card debt from your 401k. Now you have cash flow. Now you could put $300 a month back into your 401k and pay yourself back over a certain amount of time, right? That's the way out of debt for most people is cut up the credit cards. Well, keep one. That's longer story about credit ratings and things like that. But that's why, because you have to attack what's costing you. If it's costing you more than your investment, the debt. If your investment was making more than the debt, figure it out without cashing in your investment, right?
Good point. And you totally saved my life with that move because I was able to pay off the debt. I never went back to credit cards again personally. You know what I mean? I just, at this point, if I can't pay it in cash or if I don't have it in my account, I don't need it. That's
Mm-hmm.
the way I'm living my life currently. And once I get this truck up off me, that probably be the last thing I buy where I have to pay on it every month because any false move, any loss of a job, you can end up in debt.
Mm-hmm.
And debt is totally crippling when you don't have a 401k to rely on. And you don't build up 401ks for just showing up as a federal officer and doing your job. So those are always going to be there without me doing anything because all I got to do is show up for work, do my hours, and then that 401k will keep on building. But for most people in America, I don't know about Canada, but it's rough out here, my guy.
So it's the same in Canada. We have what's called your 401k translates to what's called an RRSP in Canada. And they're essentially the same, except a 401k is tied to your current employer. And in Canada, it's not tied to your employer, it's tied to you, your social security number. So I could change jobs, I can do whatever I want. My RRSP stays its own thing. In the States, it goes with that employer. Then you move employer, you have to move it to the next employer. So it's a subtle difference, but it's essentially the same. It's tax deferment for future gains, right? So, I work at a place as well with a pension where they put into my RSPs just like a 401k. So it's the same thing. If I just finish my 20 out there, I will have some form of money for the rest of my life coming in by sheerly showing up and putting in my hours. That's right. But in Canada, it's the same. Only about 20-30% of people work a job that chips in for you. So you got to do it on your own. And a lot of people don't. And then they're just screwed over because, old people get crappy Social Security in the States. They get crappy, we call it CPP here in Canada. And you're just living like the most meager existence if you didn't bank your stack or a percentage of your stack, right?
Good point. Now the next thing, you kind of helped out. But I was talking to a coworker. I had a bunch of money in Bank of America for my taxes, and I was like, "Hey, I got all this money sitting here," and he just pulled me to the side, and he was like, "Hey, Johnson, this is where I put my money at. This is where I put 100% of my money at. These people control every 401k in the world, including the one we work at now. I suggest you put your money over there." Now, before I did so, but before I put too much money over there, I reached out to you and I was like, "Hey, brother, I mean, somebody recommended this. What's your thoughts?" Now, why did you stamp that particular investment?
I remember the conversation. I can't remember what the particular investment was, though, this
It
time.
was Marcus Gold when I reached out to you, and I wanted to I put some money there, but I was like, "How safe is my money? This is an online branch only. They don't have no physical address. Where is my money going to be at? Are they going to disappear tomorrow?" And
No,
you was
okay, so I
like,
remember now. That was the online version of Goldman Sachs. I remember,
"Yes,
right? Yeah,
yes, yes."
those banks are federally regulated and things like that, so it's okay. But often your money gets chewed up in fees and things like that, sending it to them, or you got to wire it to them. You can't access it. You need it in a day. You got to wait 3 days. Like you'd have been better off walking into the brick and mortar branch of Goldman Sachs and doing the same thing, or right, like that kind of. But if it's a legitimate operation and you'll see signs of that or federal deposit insurance and all that kind of stuff and the Fed's little stamp on it and whatever, okay, it's legit. But sometimes it's not worth the convenience. They have those digital banks up here in Canada and they might pay a little extra interest or do this, but I'm like, okay, how do you get your money out? Well, you do this, you do this, you do this, you wait 2 days, you do this. Like, wow, man, I just go on my phone and go like this. Ooh, I got my money. There's some kind of things that even if it's legit, it's not necessarily the best idea, right? Like it's, you know what I mean? Like that kind of thing. And it would be a case of you could have just went to your regular bank and done that same thing, right?
Not Bank of America, because they sent me some emails. Right now they have a high yield CD going for 0.3, and I looked at it and laughed, and I'm like, why would I go back to you guys? But right now, today, I received $12 in interest.
Nice.
In
There you
one
go. Right?
month of just having my money somewhere and praying for the best, I put 35 stacks in their hands, and in 1 month I was like $12.13. Bank of America, you had my money for a year. You wasn't doing nothing. I'm not giving you my money for no high yield CD so it can
Well,
sit there
no,
for
here's
seven
the thing.
months.
Remember way back at the beginning of this conversation, Bank of America sells every conceivable investment there is. But you didn't ask the guy, and you didn't know to ask, not on you, right? Had you gone in and talked to the guy, they would have went, oh, here's 40 different things we sell, right? But if you follow just the online ad or just do the easy click, that's part of that very first conversation where we had, where it's right, it's both on that person or on the Bank of America to better invest for you. Remember, the more money you make, the more money your bank makes. So they should want to get everyone rich. And they, some guy somewhere in your local Bank of America branch is waiting to make you rich. But unfortunately, it's an education piece. And is that worker having a good day? Yeah, everyone has shitty days. Or you asking the correct questions of what can I do here, right? Because I guarantee Bank of America sells everything, right?
Hey, maybe. And maybe I may trust them again. I may be like, hey, I have this money coming from the federal government again. I'm willing to put it in your hands. Educate me on what you can do. These are all my accounts that are currently making money. One of my accounts is making $12 interest. What do you have here that can match it or maximize it? And if
Mm-hmm.
they come with something interesting, then hey, my money's already here. It'd be easier for me to pull it out. No fuss, no muss. Like you said, I ain't got to wait 3 to 4 or 5 days for the online bank to send me my money. If I want it from Bank of America, I can get it I can get it the next day,
Yeah.
which is true. So I would like the next time I have some money, I will go down there and sit with them and see what they have available. Because when they be sending those emails, I look at them and laugh. Because
And as you should, because what they're trying to do is they're just fishing for money, right?
mm,
And then hopefully you land on someone's desk and then they go and fish for better money. We call it managed money under assets. I could sell you, we call them term deposits here, or GICs. I think that's the same as a CD that you're referring to down in the States.
yes.
That's one way. And that for me, those are for old people. And not because they're old, but because near the end of their investment life cycle, their money can't go down because then they can't eat. You
Mm,
and I in our 40s, we can survive 2 or 3 more market crashes before we desperately need that money at 65 or whatnot, right? So,
mm,
there's investments are for everybody for every reason, but it's about asking the right questions at the right time. Now, for example, we'll go to myself. I have a checkings account, paycheck goes in and out. I have a savings account. I only keep short-term money in that, as in I'm saving for something for a month from now, 2 months from now, that kind of thing. Just park some cash because my checking account is attached to my bank card. So that can be dangerous if I'm at the mall and I'm feeling stupid, right? Savings accounts off to the side, right? Then I have an online trading platform. So I trade stocks right from my phone. And then I have my RSPs and I have my TFSAs. Now, those are Canadian equivalents to 401ks and things like that, right? And, so there you go. So I have all of the above. And in my direct trading platform, I can buy anything. Like any kind of investments. Like now I can't buy Bitcoin in it, but I can buy a Bitcoin ETF. Or I can buy a blockchain server company stock or, things like that. I can buy shovels. I can't actually go gold hunting in that specific. Are you still there, buddy? Lost you there, Norris. Nope.
Hey, there I am. I don't know what happened. Unfortunately, my wife called and it kicked me out.
All
Yeah.
right, so we were
So
just back in using my real world examples, right? I got the checking account, money goes in and out, that's it. Don't keep anything in it. Savings account, very short term goals. Saving for next month, something like that you need, right? That's it. Because you make dick all in a savings account, right? So your money's not working for you. It's just safer to keep it aside for your own spending habits and things like that. Then I have my investment vehicles, tax free savings account, RSP, which is 401k style down there. And then I have a trading platform. And in my trading platform, I have my investing stack. And in my investing stack, I have bonds, which are CDs, some very conservative money. I have mutual funds, which are mildly conservative money. I have ETFs, which are slightly less conservative money. And if so, a mutual fund, you know what that is? Like we all chip in, we buy a bunch of stocks, right? And that you can make decent returns on it, relatively safe. Now that a portion of your stack should be in that you go buy from Bank of America, right? That that would be something they would be all about, right? You make a little bit of money, but it's more. Hopefully, you can out earn inflation with most low risk mutual funds. That's the name of the game on that one, right? Then you can have. Then I have Bitcoin. I don't have any Bitcoin. Sorry. Like I have guaranteed stuff. I got mutual funds. I got ETFs, and then I have individual stocks, and that's the riskiest stuff. Is a share of Nike, a share of this company, a share of that company, those sorts of things. But a good chunk of my stack is in real estate stocks that pay out a monthly kickback.
like a dividend.
That's right. Now, biggest chunk of my stack. Now, they're relatively low risk stocks. They do go up and down, but I get the monthly check. I don't see a check. It just goes in my account, right? And then each month I take that and reinvest it back in. I'm thinking 50 years. Now, I do keep a portion of my stack in wildly risky stuff, and I've hit some home runs and I've shit the bed. That's where I would put my Bitcoin investment. Is money you got to be willing to burn. Now, I've had some big hits, and I had a big hit on a company that now again, I'm not the biggest expert on the mining side, but it did mining and blockchain and servers and all that. So it was selling shovels. And I made some good money in that one. But it would be the money you're willing to, if you have some money, you're willing to walk into a casino and bet on red. That is your stack for crypto. If you need to buy a car in 3 years, you need to save for your retirement. That's not the money for crypto, in my opinion. Now, an ETF on crypto, a stock of like what I'm saying, but just wildly in coins, only the percentage. So 5%, 10%, 20%, as Kevin O'Leary said, that's what he's sort of getting at with the percentage of your stack that should be in something that risky, right? Is the what he's sort of staying with that. And then different industries within my stack, even like hospital stocks and whatever industry stocks and all of that as well. And even different stock markets around the world. So my portfolio goes up and down, but also slowly climbs as it should, but lots of different levers happen along the way, right? So that's what I would recommend for almost anybody is a variation, all your eggs in different baskets. And crypto, there's money to be made. There absolutely is. I'm not the biggest expert. But I personally think now that it's a mature industry, it's more time to sell sucker shovels. 6 months ago, 2 years ago, 5 years ago, 10 years ago, that's when you should have been mining for gold yourself. Right? And that's the thing. If crypto is at historic highs right now, my regular investment knowledge tells me wait until it crashes and then buy dips. Right. If it's going like, it might double again, but it could take 10 years. It could, I don't want to say anything, of course. Right. But as the industry matures, it becomes a time to go, okay, how do we make money slower, safer, steadier? And then you look for the next new thing. There'll be a new crypto. It won't be crypto. It'll be something else. Like there was weed stocks. There was the .com. There was, what I mean? Like there'll be something new. And then that's when you first hear that new thing. That's when you go drop $1,000 on it for no reason and take it to the casino, bet it on red. Those are those guys that are Bitcoin millionaires right now when they heard of that new thing and dropped a few grand in it 10 years ago and they got $1 million in their wallet now, right?
Mm-hmm.
But that's over. So it's about how do I make money steadily for myself, in my opinion anyway, and only a portion of your stack do you go, all right, Bet it on Dogecoin or Ethereum. Here we go. Buy, right? Like that.
And I did the smart thing, like you said. I put a small percentage in all the ones that are currently doing well,
Mm-hmm.
and I'm very thankful I was smart enough just to put just a little something. I was like,
Yeah.
hey, I'm not that person when someone says, hey, something may or may not happen. I'm not that person saying, I don't trust that. Now I'm like, I might put like $25 there and let's see what happens.
Well, one thing you can, if you want to keep going in that, you go think of something like $25 a check, because that's called dollar cost averaging. So, if you put in $25 a check, I'm just picking a random number, right? It's gonna go up, it's gonna go down, it's gonna go up, it's gonna go down, it's gonna go up and go down. But since you're putting in $25 every check, it makes your cost average out smoother by doing a
Mhm.
regular investment plan, right? On your stack that you're willing to set on fire and burn in crypto, right?
Good point.
Or you could start looking at pulling out your profit. So if you took $100 and you turn it into 700, right? Take that 600 out. You have what you put in. Now it's house money. If it goes up, it goes down, it goes whatever. Then you take that 600 and invest it in something else. Like that's, and you cash in your winners. You won, go to the office at the casino with your chit and walk out with that money and put that money into something else and then put it in, you know what I mean? Right. Or catch a dip. How
Yeah,
can
that's
you invest in a dip if you don't have any money?
good point.
So if you took out your profit, so you have this one, you said it was 7. This is just suggestions off the top of my mind, right? Take half that profit out and let it sit. Yeah, you're not making any money. Then you hear in the news, oh, Bitcoin crashed. Oh, Trump said this. Then you walk in and put that money right back in that Bitcoin account when it's down, right? But you couldn't do that if you didn't pull out your profit once in a while, right? There's
Yeah.
because if you said you put in 150, now I have 700. So if you go back to your 150, who cares? You, Norris, pulled out some profit.
Yeah,
If
that was
that
my next
150,
question. When do
okay,
you
go ahead.
know? When do you know when to cash out? Because I asked my buddy, I was like, "Hey, you pay attention. I probably don't pay attention to this stuff because I got other stuff going on. Let me know when to cash out." He said he's keeping his forever. I'm not that guy that's gonna keep it forever. Let me know when it's a good time to say, "All right, I had a hot streak. It's time to go." Time to go.
That's again based on your risk tolerances, right? Or you could do something, okay, 150 turn into 700. All right, I'll pull out 500, leave 250 there. Right? And then be ready to reinvest in those dips though. Like that's, leaving your money in it forever is okay. That would be better if you were putting in $25 a check into that same thing or something like that. Again, we're talking simple numbers for people, your viewers, right? So that would be okay. But I might, in your case, take out some of your profit. Now you're on house money. If that goes up or down, Norris doesn't give a shit anymore. You made money. And then wait for dips, or then start putting in a little bit of check or whatever, that kind of thing. But find something else. If you're interested in the crypto space, keep learning about the crypto space. But in my opinion, learn about the shovels to the suckers, not the gold anymore, right? That's and find, okay, I pulled this 500 out. Oh, there's this company or this ETF, or there's this company that makes servers or whatever they need, and Bitcoin people, energy colas, I don't know, all these day traders, whatever you can get in going, right? Or think of it like you just pull out your profit. You have to realize your gain. So often, say if I put $1,000 in a stock and it goes up 10 or 20%, so I'm at 1,200, I'll pull my profit out, or I'll pull or I'll pull my grand out and leave the 200 in there, because then I don't care anymore. Right? So there's lots of different ways. There's no right or wrong answer when to pull out or when to keep your money in or do that. Again, it's up to you and your goals. But I like to pull out my money when I can, and then then it's house money, and if it goes up, it goes down, it's awesome, and then put it into something else. I'm not pulling out my money to go spend on bullshit consumer shit. I pull out my money for the next investment. Keep your investment stack as your investment stack, but move it around here and there as you see fit, as you profit. Or if you take a loss, sometimes you take a wind out of something else. Oh, I put it 250 in this one and it went to zero. You could take 250 out of another and invest it in something else, and you keep your, there's lots of different ways. But I like to pull out my money when I've made a tangible kind of profit and then pull my profit out. And I've done okay like that. Like that's a value investing kind of thing. I'm sure there's people who've done way better than me, but I started out as just a regular guy learning all this stuff, you know what I mean? And then I ended up getting a job in it after I learned about it, right? You know, and I like to pull my gains out here and there though. And I let my losses just stew and then they make me mad because there's, you know, after a while, if you put in $1,000 and it's worth 100, there's almost no point selling it. You just stare at it on my phone app and I curse that company forever, right? Hoping one day it goes up. But there's lots of different strategies. You can let it ride forever. You can dollar cost average by putting more in each week. You can pull just your profit out, or you can pull your stack out and keep your profit and play with your profit, right? That would be my approach generally. Something like Bitcoin space or a risky space is that I would pull as soon as I could pull my initial investment out, I would, and then start playing with the profit, wheeling and dealing, balling out. Because if anything goes wrong at that point, you got your money still, Norris, right?
Good point. Now, my next question, and then I'll let you give your information out so people can find you. You know, I'm Meta verified. I get good paychecks from Mark Zuckerberg now, and those paychecks from Mark Zuckerberg are very nice. Now, somebody in my position getting paid from Mark Zuckerberg for just posting on his site, what would you recommend I do with that Facebook money? Should I ball out of control with it, or should I invest that money as well?
Do you need it for your regular life?
No. The first check I got, I bought TVs, coffee makers. Norris Christmas is going to be very nice, courtesy of Facebook. So I didn't need it. I just like, hey, this is extra money. I didn't have to drive an hour and 20 minutes to go get.
Okay, so that's fair. So if it's just play money, right? What I would do is I would take half of it each month and put it into a reasonable, safe investment like mutual funds or ETF, not CDs, not bullshit, not a savings account, because you don't need this money, but something safe like a stock market ETF, the S&P 500, the Dow Jones average, like something like that, or a bit, you know, right? And then take the other half, and then that's casino money. That's Bitcoin. That's data mining. That's whatever, you know what I mean? Like something like that. And then never think about it again. Just go, okay, I got $200 from Zuck. 100 goes into this safe investment. $100 goes to the casino. And I don't mean the real casino. I mean the investment casino, right? That would be what I would suggest you do. And then you could watch your stack grow. And if one side starts outperforming the other, you can a lot of lessons to learn in there. If that $100 safe $100 it goes up longer and faster than your gambling $100 does, right? But I would do something like that with, if it's just play money, half of it safe, half of it, it's Norris, the investment guru, you know, right? Take some shots, man. Like I've had some good shots over the years. During the pandemic, I crushed it on a toilet. I turned and some of my things, when I'm talking this, like I got a decent sized stack, but when I'm playing like this, I only bet $1,000. I only bet $500. I don't, you know what I mean? Remember, it's only if you're willing to set it on fire. Right, because I don't want to bet with my retirement stack. It is invested, but I gotta need some money when I'm old, so I'm not that's where I'm like, okay, so I'll go. I made some good money in the pandemic. I bet $1,000 on a toilet paper company. Let me tell you, that paid off when all those people were hoarding toilet paper. When the electric car craze hit big and all the governments in California had all these subsidies, I didn't go in electric cars. I went into a lithium mining company. Boom, made some money there, right? Think outside the box. Like if you're interested in crypto is a very big space that isn't just coins, right? I've made some money on some things like that. I made that company that mined crypto and built servers for people for them to mine crypto. I made some good money there, right? And again, these are really risky bets. So I only bet $1,000, $500, $2,000, like however comfortable. And I've lost on a bunch of them too, but I've had some hits. So that would be my suggestion for half your money. But do your research and think outside the box is a better, have fun with it too, right? If you're looking like, hey, you're invested in yourself, you're trying to make some money, do something fun. And then the other half, do the most boring shit with it ever, because boring makes money. And even if you put your money in like an ETF or an electronic traded funds that tracks a market, like the S&P 500, which is the biggest 500 companies in the States, right? The computer does the trades for you. You own a little slice of a fund, right? That has outperformed inflation historically for hundreds of years. Your money will grow. And then what's funny is most people realize that those safe bets going up will make up numbers. Everything can change, no crystal ball. But say that goes up 7% a year. Sometimes that 7% a year steady Eddie, people are like, oh, I made 100%, I made in this, and then you lost, and you did this, and then you analyze it over 5 years, and that safe part of your stack is higher than the gambling, even though you had some big wins, some losses, some wins, some losses, right? So combo play is what Norris should do with his Zuck money.
And I will do that. I always follow your advice. So next time I get some money from Mark Zuckerberg, it will be probably going into somebody else's hands just so I can have a future. Because at this stage of the game, we are in our 40s. It's time to bank for the future. All
Yep. Yeah,
right,
I would go to
brother.
your Bank America rep and say, hey, what do you guys have for ETFs or mutual funds that I can trade from my phone, or even not, even if it's just through your online banking or through that guy where you can see it on your computer screen, but you can't touch it or manipulate it or whatever, and look for something like that, a mutual fund that is mid to your risk tolerance. You want to go a risky one or an aggressive one or one because you're paying somebody a couple percent on a large scale, and they make moves in that mutual fund, right? And they try and achieve a certain goal. So this one is going, it's an aggressive mutual fund. They're trying to outperform the market. So they're wheeling and dealing with billions of everyone's dollars, not just yours. And that's a safer, that I guarantee you they sell things like that you could do and see on your banking. And that would be what I would recommend based on your interview with that guy, your risk tolerance, your whatnot. That would be the safe money. And then get, coins or different stock. Like, I don't know, have you heard of companies like Robinhood?
Yes.
Yeah, like I have a Canadian version of that on my phone, like Q Trade, Quest Trade. That would be for your risky stuff, and you could do it yourself and learn slowly and get into trades and stocks. And you could also have a portion in coin stuff. And again, that's not something I do. I would trade in coin stocks as those come, or the shovels, right? That's but maybe a little bit in coins, right? Like, because if that interests you, and the more you're going to learn about it, then you're going to be able to make moves, or you're going to know what the next thing is, or buy the dip and all that kind of cool stuff, right? Like, I like to check my investments every day. I don't always make a move, but it's become like a little side hobby of trying not to lose my shirt before I go to retirement.
Good point. Well, Ryan, if we want you to be our investor, how can we find you?
Well, you can't unless you live in British Columbia, Canada, because of different stock licenses and things like that. But in terms of my presence on the internet, I am at the Welfare Gourmet on Instagram. And then mostly, though, I'm in the powerlifting and weightlifting spaces, as my 9 to 5 stays at 9 to 5. And at 5:01, I'm your Muay Thai fighting weightlifting bro. And then during the day, you got me to put my day cap on here and be the investment guy. But, right, you can find me on the internet. I'm always happy to answer questions for folks. But in terms of managing people's money, not unless you live locally to me, because that's how licensing all works and everything like that. But what everyone out there should do is go find your local investment guy, or go to your bank and put them on the spot. Get an appointment with one of their advisors. They're there for you. Remember, you are paying for that service through fees and through interest and through all that. And so many people forget to take advantage of those services they're paying for already. Like, you should absolutely get an appointment with that guy and hammer him with questions. Norris, you're good at asking questions. There's some guy at Bank of America that's going to rue the day that he saw Norris Johnson on that. But that, because I work at a bank, and when I like those appointments, actually, because they're engaged and they want to learn. And I'm like, this is a person I can help make money. And I use the products my bank sells, just like your guy will, right? But it's about asking those questions, and nobody knows to ask is the problem, right?
Yeah, so pretty much education, once again, is the key to any form of success. And you are talking to two people who came from rough beginnings, and we are
Mm-hmm.
very successful men in every space that we have touched. So therefore, I don't want to hear that little sorry attitude that I can't do it, or the world's against me because of my skin color, and anything else you want to make up in your mind. You can do all things through God. All right, Ryan, I will see you on the next powerlifting platform
You
sometime
bet.
soon.
All right, it's a pleasure, Norris, and everyone out there. Thanks. Hopefully, I could be some help. And remember, go and talk to your bank and ask questions. Hammer them with questions. Make some money. All right, everyone, take it easy.
Salute.